This is the main daily market rundown live from the Tradelo trading floor. It's June the 23rd. Some highlights from today's show. Markets await the Iran response. Silver is kind of bullish, and the S&P 500 to remain range bound. Good day, traders, and welcome. Obviously quite a busy news flow week and a lot going on in terms of the Middle East conflict, and we'll get to that in a moment. I think some key things just to set the structure of the week. We of course got through the roll last week, and I think that was massively important. It's very much been pinning particularly the risk markets to the levels that we are currently at, and we'll talk a little bit about the S&P a little bit later on, because there are some vulnerabilities in the S&P despite the fact that we are very, very much in a narrow range. Now, looking across at some of the overnight market moves, it's an identical setup to what we had last week Monday. So, of course, if you cast your minds back to last week Monday, that was the beginning of the Middle East conflict, and we came in with oil gapping significantly higher on the Globex Open. We had the same in, of course, gold, as well as we had some downside gaps in the S&P 500. Now, the result is almost identical to what we had last week Monday, which was we saw oil retrace the entire move, we saw gold retrace the entire move, and of course we saw the equities retrace the entire move and stage quite a significant bid. It's the same thing again this week, and I think this price action speaks volumes in terms of the expectations, or at least in terms of how the market is looking at this situation, which is they are not overly concerned. And I think it's important to stress that, because unfortunately sometimes we can read a lot of Twitter land and we can be sucked into these narratives where we think things are a great deal worse than what they ultimately are. Okay, at the end of the day, we are traders and we do have to trade the immediate price action. Now, with that in mind, let's get across and just talk a little bit about our first topic today, which is this idea that the markets are now awaiting Iran's response. And I think this is crucially important, because I think one of the key things that is becoming quite apparent, and I've used this phrase or this framing of, I think the strike by the United States was peak escalation. Okay, I said this last week in the daily market rundown, which is the moment they do actually strike those deep nuclear facilities. At that point, ultimately, that should be peak escalation, because at that point now we can move on towards diplomacy. Okay, and I stand by that statement. I think the market is also standing by that statement, and so that's why I expect over the course of the next couple of days, we're slowly but surely going to see that risk premium in the oil start to come out of the market. Okay, now what do I mean by peak escalation? Well, if you look at the actions, it's always about the actions. It's not about verbatim. It's not about words. It's not about we're going to shut the Strait of Hormuz and the parliament approving it. All of that is just words, rhetoric. It's about action. Now, if you look and you go back to the beginning of the Middle East conflict, remember we had hundreds of missiles flying after, of course, Israel initially struck Iran. Fast forward to, of course, this week. What has the retaliation response been from Iran? 13 missiles? 7 missiles? It's not quite the retaliatory response that we saw at the beginning of this attack. And so what that suggests ultimately is not that it's gone. It's not that there's no risk. Of course, there's always a risk. It's just you've got to look at the retaliation. It's not exactly a retaliation that speaks of we want to take this a whole lot further. We want to dial up the heat. If anything, it's the opposite. It's the, well, look, we need to save face. We need to, of course, strike back at some targets to make sure that we're not waving the white flag. But ultimately, this is how the market's reading into it. It's reading into it that now what we're going to see likely over the next couple of days is a bit of posturing. Okay, so the parliament voting ultimately to close the Strait of Hormuz is more of a signaling ahead of the negotiations. In other words, let's show them that we can do something in the Strait of Hormuz, so we've got a bit of leverage when it comes to the negotiations. Okay, now with that in mind, and I think this is important to stress, don't be surprised if today, maybe tomorrow, you hear something on the news wires of a ship, container, oil, whatever it might be, being seized by the Iranian Navy. Something to that degree, where they just do something that creates a little bit of concern that they have got those capabilities should they need to deploy them. Okay, that's how you get leverage in negotiations. You show a little bit of force, and then you take, of course, that leverage into negotiations to get what you want. don't be surprised. I think that could be something that's very much going to hit the wires any moment now. We could also, of course, see some attacks on perhaps one of the US military bases somewhere in the Middle East. That is something they could do as well. But again, you've got to listen to the type of attack. When the newswires launch it, it's going to be something like Iran strikes US base. That's what you're going to read. But a couple hours later, what we're going to learn is that no one died, and it was just perhaps a barracks that was storing ammunitions. Okay, so it's that sort of threat that they could do more, and they're willing to do more if we don't de-escalate. Okay, and this is more just leverage as we go into, of course, some of the diplomatic negotiations that are going to take place in the next couple of days and weeks. Okay, now important to understand, because that means if this is the next step, talking is the next step, it means we are beyond the point of peak escalation, and we can now start to sort of frame and understand what comes next in the whole Middle East conflict. Okay. And so I think just keep a close eye on that. Like I said, you've got on the left-hand side here, you've got some of the key sort of expectations. What could some of those retaliatory sort of signaling attacks look like? Well, yeah, maybe they go after an energy facility somewhere in the Middle East. Okay, again, risky, but again, if you want to gain some leverage, it is something they could do. They know that global oil prices are very impactful for the whole world. Okay, like I said, there's a number of things they could do in the Strait of Hormuz. Anything there where it's a little bit of disruption, that's the word, disruption. Anything that disrupts, maybe they lay some mines, or at least they threaten to lay some mines. Maybe they seize an oil tanker. Maybe they send a couple of speedboats after a ship and sort of antagonize them. Something along those lines that creates a bit of disruption. Ultimately, that is going to cause a little bit of concern for markets. Okay, and then like I said, any strikes on some of the US or UK military bases in and around the Middle East. Okay, then of course on the positive side, okay, any talk of Iran and the US or Iran and Israel are going to sit down in one of the countries to discuss what the future deal could look like. Also, if Israel confirms the completion of the operation, I think that'll be quite positive again, all leaning towards this idea of peak escalation. In other words, things get better from here, not worse. Now, before we move on, of course, to the charts, just a quick word on one of our key relationships. Do you have the trading skills, but you just don't have capital to leverage those skills? Well, look, Rain Trading is the only traditional prop firm that invests in future traders. Join Rain today and you'll be entering an ecosystem with 8-figure traders, access to TT, mentorship, unlimited scaling potential. If you're serious about a career as a professional trader, you want to do this as a career, then click in the link in the description below. Now let's get across and talk about some of the key charts, because I think there is a couple of very key things to pay attention to. Now, this is the gold chart, okay, the ultimate risk-off a safe haven asset. It has proven to be a perfect risk-off asset this year, better than anything else, better than the bonds, better than the dollar, better than Bitcoin, dare I say. Now, the key takeaway, and this is crucial from a technical analysis perspective, is that we topped in the gold effectively last week Monday. That little red candle there is last week Monday. Okay, now this is crucially important, because what you can see over the course of the whole of last week with all this Middle East tension rising is that gold was down $80 on the week, down during a Middle East crisis. Okay, what that tells you is that the market is full up. Okay, there's an expression in trading where the market is just full up. It's not that suddenly where the trend has shifted. It just means that everyone that wants to be long is already long or was already long, and it's very difficult for the market to stage a further bid until we get a new catalyst. Okay, and I think this is very, very important, because I think what it means is that this week I suspect we are going to get some more downside in gold. Okay, I'd keep a very close eye on it. You can see the last 3 sessions there. We've got effectively 3 dojis. Market very indecisive, just does not want to go bid. We can see that again in the overnight, got slammed straight back down. Don't be surprised. We take out those weekly lows to see a little bit of a flush out towards the bottom of this box. Okay, what is this box? It's nothing other than just showcasing the range. Okay, we are stuck inside this range from 3280 up to 3400, and I suspect we're going to see more of that range bound trading this week, but the technicals point towards downside. Okay, now how does this come into play? Well, like I said, over the next couple of sessions, so long as we don't get significant retaliation, so long as the heat doesn't get dialed up, ultimately we are going to see that gold move towards the downside. Okay, so it's a case of day after day that goes past where we don't see escalation. It means we're more likely that we see talks undergoing, diplomacy undergoing, and that's ultimately what's going to push the gold price towards the downside. So keep a very close eye on that. Now, in terms of our big picture view, I mentioned the word trend. What you can see now is on the line chart, we have effectively triple topped. Okay, so these are the daily closes, and what we can see is we've triple topped ultimately in gold. Now again, what that does tell me is that at some point this year we are going higher. Okay, I don't think that structure is going to maintain itself, but it needs a catalyst now. It needs something, whether that's more inflation, whether that's the Fed prematurely cutting. We need something along those lines to break through that high, and I don't think it's going to come anytime soon. Okay, if anything, I think we're probably going to test that 50-day average down at 33.20 again, which is about it's about $40 lower. Okay, so I think that comes into play this week. Can you buy it there? Sure. Okay, I think you can probably fade it there first time, but keep in mind that of course we still have that 100-day average around 31.45, and of course the 200-day average all the way down at 2,900. Okay, so it's a market that is still very, very overbought. Now, overbought doesn't mean bearish. Overbought just means it's going to need to spend quite a lot more time in a range before we can of course resume to the upside. Now, oil, and this is kind of speaks volumes about the market. You can see since the attack started, which is that big day there, we're pretty much stuck inside that 68 to 78 range. Okay, there's around a $10 premium priced in since that attack. I'd argue that effectively that premium started pricing already on the breakout of 65. Okay, so somewhere around 65s, that was the breakout. I suspect there's still around $10 of premium priced in. But what we can see, and I think this is crucial, is even as this war has escalated, even as the US has now entered, oil still cannot break outside of this range. Okay, and again, that is this idea that ultimately the US attack was peak escalation, and then in order to ultimately break out of this range and really get people buying into this oil sort of escalation, you are going to need something big to happen. Okay, you're going to need something crazy to happen, and again, probability wise, it is unlikely. That's why no one's taking that play. And if anything, don't forget, oil is very heavily oversupplied. It doesn't matter how you want to argue it, and the point is, if it's very heavily oversupplied, no long-term players are going to want to be very aggressively long at this point. Okay, if anything, if they feel like we are now at peak escalation, it makes absolute sense from a risk-reward perspective to start building those shorts again as things start to de-escalate, as diplomacy takes over. Okay, keep in mind, should we get some form of talks this week, should things start to sort of really kind of point to a peak escalation, ultimately we can trade all the way back down to that 200-day average around 68.5. Okay, we've really got about $8 or $6 to $8 a downside conservatively should things start to look a little bit better in the Middle East. Okay, now with that in mind, if we also look at the trend of oil, as you can see, that 200-day moving average is firmly downward sloping. Okay, so from a technical analysis perspective, if this sort of Middle East crisis had never really begun, I suspect markets would be a hell of a lot lower than where they are right now. So don't forget that this is a market that has been very, very weak up until the point that, of course, we did start to see things flare up in the Middle East. Okay, but like I said, most likely, should things de-escalate this week, I think that 200-day moving average is the most likely target on the short side. Okay, then moving on to, of course, silver. It is a market that I don't trade actively. Fine, I'll swing trade it every now and again, but it's not an active market trader. Now, I think what sort of perked my interest on this is for the last 2 weeks, I think a lot of silver buyers have finally been getting excited again for really some really good reasons. But what I want to point out is, yes, we've had this big technical break. I think that's key. That's obvious. We've broken above 35. So you can also see that silver is outperforming gold. Okay, every time gold is down, you can see silver typically doesn't go down as much. And you can see when silver rallies, gold doesn't really bid as much. So at a percentage level over the course of the last 4 weeks, silver really is proving itself as a technical breakout. We've broken out. Okay. The key takeaway now is what comes next. Now, one thing I want to point towards is that if gold is going to come down, and like I said, and retest that 50-day average, I do suspect that silver is probably also going to test that breakout point. Is it a good buy there? Yes, perhaps. I think it's going to be a very, very good buy because it is the outperformer. So I think paying attention to that 35 level over the course of this week will offer a good buy opportunity. But what's key, and I think this is crucially important to stress, this little move down, where oil really got spanked from 34 down to 28, was ultimately driven by the tariff situation. Okay, now don't forget, we are 16 days away from Liberation Day 2.0. Okay, 16 days, that's not a lot of time, and there's absolutely no deals other than the UK deal. Okay, now yes, there's some murmur and talk that perhaps the Trump administration is just going to extend that deadline, and that is probably the most likely outcome. And should we get that outcome, yes, I think all bets are off, and I think silver will make its way back up towards those highs that we printed last week. Now, the key takeaway is, however, what happened on Liberation Day 2.0 is that silver got sold off very, very aggressively. And I think that's a risk to be very cautious of, because should we see a flare up again, perhaps not this week, but next week as we move into that deadline, don't be surprised to see oil come back below the 35s. And if it does, don't forget, everyone is long silver. Everyone in the dentist is long silver, because apparently silver is a proxy for gold, which is not true. It's more of a proxy for AI, fine. But don't forget, it's very much just an industrial metal. Okay, so should we get those tariff situations back in play, of course, all industrial metals will struggle in that scenario. And don't forget, we get below 35, a lot of people are long, so we could get quite an aggressive flush out. Okay, that is the technical analysis on silver. And then, of course, finally, the S&P 500, again, another box. The boxes are great because the boxes tell us everything we need to know, which is we're pretty much unchanged now for three weeks. Okay, this is the fourth week we're entering the zone of 59.50 up to 6100. Don't expect fireworks, okay? You're going to need something to break out of the zone. Now, right now, I think the moving averages have all caught up. Okay, so in other words, this very overbought move is now starting to neutralize through time. But ultimately, we're in for perhaps another sideways market. Okay, so keep a close eye on this week. It's not a week necessarily that we are going to get any fireworks to the upside or to the downside. We do, of course, have the month end coming into view. What it does mean is we still have to be playing these ranges. Okay, until we get a catalyst, we have to be playing these ranges. Now, one thing to point out is that ultimately the S&P 500 is unchanged throughout this entire Middle East escalation. Okay, now again, you can argue, well, what does the Middle East have to do with, Apple, tech stocks? Pretty much nothing. Fair enough. Okay, but the key is that the equities have held up very, very well during this risk-off period. And so the general thinking is that should we start to see de-escalation, don't be surprised to see us try and pop above this range. Do we hold that break and move towards record highs? Perhaps yes. If we fail outside of that box and come back inside, well, we know box trading rules suggest we will then, of course, trade back to the other side of the range. I think the general line of thinking as of last week is now that we are more likely to have a 5% down move than a 5% up move. I think that's starting to become a little bit of Wall Street consensus. But again, that just speaks volumes about the lack of being long after this very aggressive rally. So don't forget, if the market doesn't give that pullback, if it doesn't want to even retrace 4 or 5%, it does mean people are going to be forced into buying this high back up towards record highs. Okay, with that in mind, then let's just summarize. We of course have got the market PMIs coming out today, which are very, very important for the US. They are a sort of a leading PMI. They come out before the main government published ones. That come out in the sort of first week of the month. So keep an eye on those. Those do come out this week for the US. We do know that services PMI that the US government released earlier this month was quite a shocker. So watch that market PMI. Don't forget, there are still some concerns about some of the hard data at a time when, of course, inflation expectations are rising in the US. So keep a close eye on those market PMIs. Otherwise, we will have later on this week, we'll start to move into the month-end rebalancing. So that is going to be a core focus this week. But don't forget, we are very much in headline-driven markets. These are the kind of markets that you kind of have to be, taking less positions and just more finger on the trigger, waiting to ultimately understand what is Iran's response and are we actually at that point of peak escalation. Okay, with that in mind, don't forget, if you have got any questions, post them in the Discord channel. Also, make sure you like and subscribe to the channel and comment, because it does help us, of course. Otherwise, good luck out there. Manage the risk. Go make some money.